Do-do-do-do. Do-do. So look around the world, pretty baby, is it everything you hoped it'd be? The wrong guy, the wrong situation, the right time to roll to me. And I don't think I have ever seen a soul so in despair. If you want to talk the night through, guess who will be there? Oh, so don't try to deny it, pretty baby. You've been down so long you can hardly see. When the engine stalls and it won't stop raining, it's the right time to roll to me. The right time to roll to me. The right time to roll to me. Good morning, fellow billionaires. This is Silver 5150 with your morning update for Tuesday, September 22nd, 2020. That was my take on Scottish rock band Del Amitri's Roll to Me. And I don't know about you, but at least I'm hoping that the right kind of silver rolls to me. Yes. And I know I've been going on about El Banco de Mexico's effort to put out the 2020 Libertads, but that's really all I lack in my stack at this point. That's really all I lack. I've heard issues, dates as early as Thursday, as late as the 30th of this month. So I'm hoping soon. I've got alerts out to every retailer out there to let me know when to get in. So look, I mean, any extra silver is good. But a couple of tubes of those, a couple of tubes of the silver Libertads, the silver ones, we'll let the broker help himself to the gold ones. We'll get the silver ones. A couple of rolls of silver ones for me. And I can pretty much close out the year as a stacking success. And speaking of silver, we're going to continue our hodgepodge this week with a variety of offerings from too many places to mention. You're just going to have to enjoy the view. Check them out. I think this one here, where's this from? That is... SD Bullion. How about that? Anyway, so... we're going to go ahead and pan through these and stuff, and we'll talk to you about some things that happened today and yesterday and so on and so forth. So yesterday we saw there was a big drubbing in the markets, of course, and I think the Dow got down as low as 971, but closed at 509, meaning that the Fed stepped in. The Fed stepped in and just kind of cleaned things up at the end of the day. It's what we've been used to. It's what we expect. It's what they have to do to keep things going. And so yesterday we tried to make sense of those capital markets. Then shortly after deciding they make no sense, went on about navigating our way to buy metals from various retailers, various sites, right? And local coin shops. And speaking of local coin shops and retail sites, I had a subscriber school me yesterday. Subscriber schooled me yesterday on the machinations of premium adjustments and stated that bullion dealers do not adjust their premiums on the price of the metal. And it's the free market supply and demand that dictates when and to what degree this takes place. Talk about the premium hikes. So I had no idea about that. I thought for sure that, the dealers had some control over what premiums would be on their products in the inventory anyway. And it makes me wonder how a number of similar outfits, JM Bullion, SD Bullion, Atmex, the usual suspects, how so many similar outfits could have such a disparity in pricing on like items if that's the case. But what say you guys? Do you agree? What are some of your experiences with premiums? Inquiring minds like Creo the Lone Traveler wants to know, and I'm with him. Can we disregard the whole notion of variable premium adjustments among retailers and just buy with confidence without any need for scrutiny? I certainly hope this is the case because let's face it, we need all of the help we can get when it comes to that. Yeah. So anyway, look, I obviously was in over my head a little bit on the premium subject. All right, I casually mentioned that yesterday's morning update, talking about my thoughts on the premiums, and apparently some took issue with it. I get it. All right, so I think for this morning's update, I'll try and stick to something I maybe know a little bit more about, which is why in the heck are the markets gyrating around like this? I mean, it's just crazy the volatility that's going on. The VIX is up to 33 points, which is halfway up to its all-time high. But man, for what we're getting, it should be probably around 50. So let's look, what we're going to do. Here's what we're going to do. The next 3 days, we're going to take a casual romp through the various indexes, all right, and try to draw some correlations between the different asset classes. Because, man, I got to tell you, the real world events, everything that's happening, all the different storylines that are coming out, they don't make any sense. They don't make any sense. The valuations we get in the markets make no sense. And that's the way it is today in the capital market. So let's see if we can piece some of this together. All right. Right after we take a quick look at the markets. All right. Ooh, nice jam, bullion eagles. All right. So right now, stock futures are at the flat line. After taking that drubbing yesterday, you got the Dow is now 27 points at 27,000. And 28, so it's down 0.1%. It's no big deal. S&P futures are actually up over 0.1% at 3,279. And then the other indexes, the Russell 2K and the Nasdaq, they're coming along to just above the flat line. It looks like they're going to try to do some semblance of a recovery today. We're not going to get a snapback recovery today. That's not going to happen. It's just the currencies aren't letting it happen, and I'll get to that in a minute. Right now, commodities are doing okay. Oil is up, not back to the $40 flat line. It's at $39.86, up 32 cents. And then, of course, gold, the big yellow metal, is up past $19. If you guys took advantage of that yesterday with the $1,800 price, good for you. If you're able to get some gold under $1,900, that was definitely a sale. And silver, same deal. We got down to 23s for an instant. So I hope some of you guys were able to take advantage of that, or if you got a local coin shop that'll work with you and maybe sell you some stuff at spot or below spot. So right now, silver is at $24.41, up barely above the flat line, 2 cents up, and on the way to see if it can capitalize and do a little bit of recovery today. Again, no big snapback recoveries today. I thought for sure that with yesterday's drubbing, it would really cause that to happen today. That we see a lot of green today. But I think Jerome Powell's going to be speaking today. I think he's going to go before Congress and say some things. And so when that happens, of course, the markets, they kind of freeze up a little bit and they sit there like a deer in the headlights. All right, so that is your markets. Real quick, let's just talk about the dollar because we're actually going to focus on the dollar today. But right now, the dollar index is actually back down. It really soared yesterday and took the euro down quite a bit. And the dollar is still inside the 93 handle at 93.56, down some 12 basis points. And it looks like the euro is going to get to capitalize today and bring some of the other indexes that are valued in dollars with it. We talked about how that works in the past. All right, so that is your market brief, okay? And this is going to allow us to focus our attention on the nuances of the volatility we're seeing. And I think today we're going to use the dollar, King Dollar, the mightiest paper currency to ever engulf the planet, to help explain some of it. The thing is, if you've listened to the White House, you hear the president come out every once in a while. He'll talk about China being currency manipulators and currency manipulation this and currency manipulation that. But you know what? I think every government does it. Every government does it, whether it's the People's Bank of China doing it with the yen, whether it with the yuan, whether it is us doing it with the dollar, or Mexico doing it with the peso, or the Russian Federation Bank doing it with the ruble. I think all countries manipulate currencies to try to decrease their costs of imports if they can, and of course increase their cost of exports if they can, to benefit them. And I don't know, I guess it takes its toll financially on the globe, but I don't really see, except for making things difficult for us to interpret in the markets, I really don't see, how that can be a problem currently with everything that's going on. All right. So, look, we're talking about the dollar and stuff, talking about the mighty dollar, and it is the world's reserve currency. The dollar is the world's reserve currency, and as such, is called on to do many things. Right now, the United States dollar is called on to do a ton of things. Let's give some examples. Some examples are the dollar has to run the United States government. All right, it has to run the United States government. It has to capitalize banks all over the world, not just central banks and the banks in America, in the United States, but it has to capitalize banks all over the world. The dollar has to backstop the real estate market. It has to backstop the stock market. It has to finance infrastructure, finance numerous unfunded liabilities. Now, when we say unfunded liabilities, we're talking about paid and unpaid benefits here, in the United States anyway. Quick examples of these are Social Security, Medicare, and Medicaid. And these are paid benefits plans where the recipient pays into it initially in order to receive that increased payout later. Okay? Versus, say, unpaid benefit plans like social and corporate welfare plans, which are more like grants or, dare I say, stimulus packages, which we are not experiencing right now. Yeah, I don't know what the deal is with the stimulus. I think it's being used as a political tool at this point. The closer we get to October and November, one has to believe that the timing on that is suspect because there's really no reason why they couldn't have put the stimulus out sooner. But I think there is an effort to get political mileage out of it, which is a shame. But we'll get into that some other time. All right. So the dollar is also responsible, by the way, for financing foreign aid. We help a lot of countries out that are having trouble, even the ones that hate us. Okay, here in the United States. But so we finance the foreign aid. We bail out floundering or bankrupt states. Now, I mean, we haven't seen that yet. Talking about the United States, we haven't seen the Fed trying to actually bail out states like California or Florida or Washington, whichever ones are hurting. And yes, the dollar also funds the stimulus programs that are geared toward the employed and unemployed people in the United States. But that state thing, you could actually argue that if the states were able to keep those programs going, they're probably receiving money from the Fed to do it. So in that particular case, indirectly, you could say that the Feds, are kind of bailing out the states a little bit. We'll give them some help anyway. Okay, so programs geared to the employed and unemployed benefit from the dollar. Okay, now more recently, the dollar has been called on to provide an ever-increasing multi-trillion-dollar pool of cash for the banks to draw on, what we were talking about yesterday, for overnight lending. Okay, and oh, by the way, the dollar is also required to provide a truck ton of cash to prop up all the derivatives for the capital markets. Yeah, because if you look at some of the indexes out there, you can see like on investing.com and Bloomberg, they will actually show you with a little tab next to whatever index you're looking at, whether it is commodities, whether it is currencies, bonds, anything like that. You'll see that it has a little tab next to it that says derived. So those markets are derived, and as such, they are backed by cash. Those derivatives are backed by cash. Those little insurance plans they have. That's, the ones that are leveraged against precious metals. Of course, when you're talking about derivatives and other commodities, they're used to keep prices artificially low. That costs dollars to do that, okay, because they got to create the contracts of stuff that doesn't exist. All right, and all the other derivatives that are used to lift failing asset markets everywhere else. Okay, so the Fed has to maintain also a $1 trillion balance sheet, a $7 trillion balance sheet, in fact, and that thing is growing. Okay, it's growing. Exponential to, well, not exponential, but, in correlation to everything that they're trying to do. So, and let's not forget the M2 physical money supply. So the M2 money supply is the physical money supply. And I'm talking about the actual ones, fives, tens, 20s, 50s, and hundreds that everyone else has to use to get things done. I'm talking about as regular people. And that is at nearly $19 trillion, according to the debt clock. So all those things I mentioned, as you can see, the dollar is quite busy. It has very little room for error and with no let up in demand. All I can say is thank goodness that there's never been any issues with the massive counterfeiting of or hoarding of. Wait a minute. I think I'm wrong. From Wikipedia, the definition of the supernote or superbill or superdollar. A superdollar, also known as a superbill or supernote, according to Wikipedia, is a very high quality counterfeit United States $100 bill alleged by the United States government to have been made by unknown organizations and governments in 2011. Now, government sources stated this during an extradition court case that these counterfeit bills were in worldwide circulation from the late 1980s until at least July of 2000. And while there are many features on the original supernotes that can be detected by today's technology, new, more sophisticated supernotes are always being produced. There's currently no technology that can guarantee capturing 100% of the supernotes in circulation. While various groups have been suspected of creating such notes, the United States believes that it's highly likely the notes were produced by North Korea. Though a cache of these $100 bills were also found, $35 million worth, by some British counterfeiters who were arrested in 2002 for producing those notes. So the thing is, we see that the $100 bill especially is very popular. In international circles. Not saying everybody's out there counterfeiting them and stuff. I can tell you guys of an account of mine, a personal account to where I had a transaction happen between some of my investment group and myself, and there were some $100 bills involved for the purchase of metal. I took that cash to the bank, and when I got there, I tried to use one of the kiosks and one of the ATMs to deposit the money, and even though I had more bills in the stack, that particular $100 bill did not fly through that machine. Okay, so since it didn't fly through the machine, I ended up having to go up to the counter and talk to the teller, and the teller had to call the manager, and the manager comes out and he looks at the $100 bill, and I explained to him, I says, hey, I tried to deposit this thing, a friend of mine, gave it to me in a transaction, and if it's not what I think it is, I need to go have a little talk with him. I need you to tell me what I got there. And so the manager looks at the teller and he goes, go ahead and deposit, a different $100 bill for Mr. Pointer. And I'm like, well, so are you guys going to, are you going to be able to tell me about it? He goes, well, no, don't worry about it. We'll go ahead and take it, and we'll get you a better one and put that in there. He didn't give me any explanation, talking about the manager, about why the bill failed, what they plan to do with it. Maybe they have an investigative branch or, an enforcement branch that's going to look into it. But they seem very casual about replacing a $100 bill, which doesn't give me a lot of confidence that, the authenticity of the body of $100 bills out there. I don't know. Maybe I'm just a little bit paranoid. All right. But that just goes to show you there are disparities in this system, in the paper cash system, that need to be looked at. And let's not forget, by the way, in 2003, when the U.S. military stumbled upon a little fast cash in Saddam's stash in Iraq. Okay, Saddam had a bunch of $100 bills in Iraq. He had actually more than just $100 bills, all different denominations. But this is from the San Francisco Gate, April 2003, out of Baghdad. 2 Army sergeants stumbled across a sealed-up cottage that seemed a bit curious, which set off a search and seizure probe that ultimately led to the discovery of an estimated $650 million in American cash. You guys remember that, right? Back in 2003? I think they found Saddam in a spider hole and stuff, and they started looking around in Baghdad, and they, started turning up all these things that he had put away, and that cash was part of it. I think they even tried to make a movie out of the gold part, which was pretty cool. But anyway, yeah, so all those hundreds that were palletized and in steel boxes and stuff, and up until that point, the $650 million, nobody even knew it was missing. They didn't know it was missing. I don't think the Treasury knew it was missing, or maybe they just don't track it. It's cash, But it just been sitting there, not doing anything and accumulating inflation. So look, anyway, any day of the week, the powers that be, they can stage an attack on the euro, either through Europe's own central bank, like they were doing yesterday, or ours, giving the dollar the ability to send every other market into a death spiral. And the fear index hardly ever moves. How does that work? So let me back up a little bit. We were talking about currency manipulation earlier. We were talking about, how the president kind of rails against China about it. But I'm telling you guys, it happens everywhere. And it's not like it's some malevolent practice to cause harm to, competing countries. These countries are manipulating their currency to help themselves, survive through these tough times because, they don't have a lot of people working or they're not producing a lot. China used to be the powerhouse of production here for the last 15 years or so. That's gone. And so you have to just keep in mind that, they're going to cut corners wherever they can, and other countries are going to cut corners wherever they can to try to, get the most out of their currency, get the most out of their financial system, keep their banks alive. It's just something they're doing. And so we have to keep in mind that our dollar, it is not just a medium of exchange. It's not just a paper currency, but it's also a currency that's backed by faith, the full faith and credit of the United States and the faith and belief of the people that use it, us. Okay. Now, if you're a stacker, your belief system may be a little shaken or a little compromised when it comes to the real value of paper currency, cash, dollars, rubles, pounds, whatever. But you still need to use them to get what you need. And that is this beautiful stuff here. So we continue to play the game while other people dream the dream, and that's just kind of how it works out. All right, but understand that central banks, they do tweak their currencies sometimes to either aid other countries or to sometimes just aid their own country. All right, so say for example, yesterday we had the dollar make this huge jump, and it took gold and silver, down to the depth. It took stocks way down to the depths. It could have been either just the European Central Bank, selling off the euro, or threatening to produce a lot more of them, or threatening to lower interest rates, or it could, be some quiet, thing in the background here in the United States, to where the United States Federal Reserve was talking about, experimenting with interest rates or maybe going back on policy. Who knows? We don't get to hear everything. We can only assume, that these things are happening because the energy is real. You see that what happened yesterday in the stock market and, of course, in the commodities markets and stuff. Or it could be a combination of both. It could be both countries collaborating, going, okay, we're going to draw this down, and you guys can lift that up, and then we can create this effect right here, maybe bleed off some of the toxicity from the banks out there, keep them alive a little longer. This is a global thing. It is a global thing that the powers that be are trying to keep in place. And so they do work together to get a lot of things done. Yeah, we know that we have our international adversaries like Russia and China and Iran and all this stuff, but trust me, everybody that's in charge, they know what's going on and they know the things they have to do, even though they kind of do the phony saber rattling. They know what they have to do to keep this game going. So they're going to do it. And it's going to manifest itself in the capital markets. Now, look, like I said, there's a lot of things tied to the markets. There's a lot of, pensions and, different, currency systems and banking systems and, government programs and all kinds of stuff that are attached to the banking system and the currencies. And so, look, it behooves everybody just to try to cooperate as long as they can until those currencies, especially the dollar, starts to exhaust itself. And when I told you all these things that the dollar is, being called on to do, how long can it hold up? How long can it hold up? The contracting, for COMEX, where they have to sit there and, make up paper contracts for metal that doesn't exist and then sell them into the market to keep the price structure down. That's a huge thing into itself. $5 trillion of paper silver it takes a year to control what used to be 800 million ounces in production. Now it's like 400 million ounces in production because we're only producing half what we produce because of COVID. So, all these things, they cost money, and at some point they're really going to take their toll, which is why we say, this system, this currency collapse is going to end with a thud. Tuesday night, everything's going to be fine. Wednesday, the bank's going to be closed, bank holiday, the market's going to be closed. You won't be able to see anything on the screen. And of course, you won't be able to get a hold of your retirement fund manager, your hedge fund manager, because his phone will either be unplugged, well, they don't do that anymore, or simply, on voicemail. He's not going to want to talk to you. He's not going to talk to you. All right, so look, with all the things I mentioned about the dollar's responsibility, the woeful lack of accountability in its physical form, talking about the M2 money supply, and all those bills and stuff that were found and Saddam had, and they were, counterfeited and stuff. The unlimited QE that we're seeing, or quantitative easing, in the electronic forms of the dollars that are coming out of the Federal Reserve. With all these things going on, are we really to believe that the dollar is the best we can do? Or better yet, is here to stay, without competition, and can never be supplanted? The euro's not strong enough. The peso's not strong enough. The ruble's not strong enough. Well, yeah, this is true. To compete with the dollar, these currencies aren't strong enough. Or as I heard Jeremiah Babe say in one of his podcasts, that the dollar is the least sick kid in the hospital, so it gets the most visits. I guess. That's just kind of how it went. I'm paraphrasing. But in any case, so, we're supposed to believe that because the other currencies aren't as strong, that the dollar is the best currency we could ever hope for, because nothing else is strong enough. Well, guess what? There are currencies out there strong enough, and they're called gold and silver, soon to be known as unobtainium and unaffordium. Now, will we get to, unobtainium and unaffordium before, we get to these high valuations we were talking about, $600, $1,000 an ounce for silver, $20,000, $25,000, $40,000 for gold? Will we get to the point, to where they're just not available before that happens? And, that would be a very interesting time. It could be. But my question is this: with all the things I outlined about what the dollar has to do and how it can really, really rock the markets and cause it to gyrate around like this, where will you be positioned when this inevitable wealth transfer takes place? Because that's what it's going to be. It's going to be a wealth transfer. The least liquid assets, the derivatives I was talking about, the things they're doing with the loan programs for the housing, for the real estate market, the deferment of these interest rates for student loans to start with, and then on to other loans to begin with. All of these things, the counterfeiting, possible counterfeiting out there, the offshore accounts and cash and money that nobody even knows about. We don't really know how much M2 money supply there is. We can only speculate. We're probably close at the $19 trillion mark, but who knows, right? But with all of that stuff out there, where will you be positioned when this inevitable wealth transfer takes place? As all those unliquid assets move into the most liquid, like gold and silver. Whew, man. Okay, you know what? We're not done with this, but I'm going to have to go ahead and cut it short for today. I'm Silver 5150 telling you guys that your stack is not whack, and that it is not just not whack, it is the ultimate wealth transfer receiver. As these things break down, your stack is going to start receiving the energy from it in a very positive way. So yes, your stack is not whack, and that just 15 ounces to your name keeps you 99% ahead of the game. So I ask you, do you please like, share, subscribe, and comment, and join us back here tomorrow in another segment of Why the Heck Are the Markets Gyrating Around Like This? Because they are acting really crazy. So guys, go out there and have a great day, stay safe, and keep stacking. Later.